Thank you so much. Actually, I was prepared to do my speech in German because they said it would be German in the morning. But as you see, the slides are already in English, so I'm quite flexible. I'm able to do this in both languages. Nevertheless, in German, I'm more profound and I'm better. So forgive me if I don't find the right words once in a while. Coming from mining, going to rocket science is quite a big step, which I try to do now. This is my fourth presentation after Hamburg, Frankfurt, and Munich, or Munich, Hamburg, and Frankfurt. We are now here together with my colleague Norbert to present as I say it, the oldest startup in Germany. Avemio Group is built on Teltec Group, which is a company which is 30 years old. And the reason why we went public is that we are quite sure that we do have a business model which is quite unique in a sense that we are dominating a market which is not quite yet existing statistically, at least. So it might be not as easy as understanding a gold mine to understand what we are doing and why we are doing it against the major trends since years. But I will try to explain it a little better. Let me start with introducing. We give you some overview of where we come from, what we are doing. As I said, Avemio was built via a reverse IPO. So we took over an existing shelf company, and at the stock exchange in Düsseldorf, we uplisted into the primary market. And we are here to present ourselves. Not actually are we sure that we are yet able to make a capital raise the usual way. We have to make some homeworks at least in the next month. But the resonance so far is quite good in terms of the capital market conferences we went to. The next growth steps we will do on our own steam. So this is where we come from. Actually, we are 30 years old, and we have a quite good market performance, a quite good track record. We are today in the German-speaking market by far the biggest dealer, and we have some plans for the future. Did they always come true? No. Did something go wrong? Yes. Did we prevail anyway? Of course. So actually, this is now the story that we want to go. That we want to increase our business internationally and do what we did in the German market, consolidate our market, which is quite unique, and I will come to the market later on. Here you see some key figures. My esteemed colleague Norbert Gunkler, who is in charge of the numbers, who is the CFO, will give you some more backgrounds at the end of my presentation. And after that, we are open for questions, of course. We are three guys in the management, added by Steffen Schenk, who is the COO. He takes care about the operations. He is not present at the moment. He has to take care about the operations as well. So where are we coming from? We are actually a startup company built in 1993, which makes us 30 years old. We had quite a unique approach to the business because we were the first who established a manufacturer independent business model, which sounds not that unique, but it was when I entered the market, it was a seller's market, and seeing the market transferring into a buyer's market motivated me to build a manufacturer independent dealer. And by doing this, we were able to consolidate the German-speaking market, which was quite fragmentized because of the federal political structure and the matter that there was not like London or Paris, where 90 or 80% of the business was done. We had several media cities and different players because we were working in the 90s in local markets. But at the end, we prevailed to consolidate the markets and to get all the major competitors we had in the market to put under one roof. We started in 2017 with Videocation. Videocation was the big player, the big Sony partner in Munich. 1 year later, we joined with Video Data and a sister company, Creative Tools, in Hamburg, which gave us a nationwide presence. And in 2021, we were able to manage to merge with the former existing market leader, BPM, also in Hamburg. And talking about BPM is quite interesting. To give you some more details, when we managed to become market leader in the German market, in our niche market, which is the broadcast market, the professional film and video market, we were heading 15 million euros, and everybody was telling me, now you will not increase your business, but this year we will do at least 120 million euros turnover, and we have some plans for the future which will be 10 times bigger than that. In 2023, this year, we managed what we said. We went public, not only to grow our business anorganically by acquiring other already identified targets, but also to move into the realm of being a more IT orientated company, which gives us today 2 pillars of our strategy, which is on the one hand side built by Teltec, a very strong dealer-orientated company with a large target list, and on the other hand we have the software and the IT component of the Move It side. There is a big synergy. For example, Move It is doing the UEFA championship, the FIFA championship, in the next year also the Olympics. So what they are doing when it comes to those big events or to workflow solutions, they do the IT solutions and optimize whatever is needed. To point out one synergy, if there would be a studio or a TV station built in Brussels in the next year with a budget of 15 million, we are able with this group now to establish this company finance-wise, resource-wise, know-how-wise. So this gives us a very strong and effective standing in our markets. And my view of the market, my vision of the market was also that we had to transform as a dealer to more cloud-orientated business, which is not yet done, but with the Move It acquisition, we managed to also have a company now in the group which is doing software solutions as well. So to give you a short overview about the 2 pillars in our strategy, the Teltec business is quite easy to understand. We sell all products from all major manufacturers in the professional video side, and we deliver to all customers, and all customers means whoever is making money with moving pictures, in producing, in sending, in whatever you name it. We are the potential deliverer, or they are our potential customers. The spread is quite wide, from the Hollywood DOP to the ZDF to the YouTuber. And this unique marketing position gave us the advantage that made us able to consolidate the formerly fragmented German market. The Move It guys, they are quite they have 5 different areas where they are in, so they are more selective than us with the brands, with the customers. They have a high-end customers and of course industrial customers at the high end, and there is a lot of synergy as well. The market we come from is the broadcast market. The broadcast market is expected to grow more than 17% in the next years, and this is actually the market where we're coming from. The broadcast market actually was not doing so well in the last 10 years. So what we managed to do is to position ourselves to get all the other statistically very important market segments, like security and medical and AV production and conferences technology as well. For example, in the COVID crisis, we were able to switch from the spot from selling high-end equipment to streaming appliances. So what happened with the digitalization in our business is there came up completely new segments like gaming, like streaming, of course, what we are doing now, what was very popular and very good running in the COVID crisis. Of course, video, virtual reality, augmented reality, and there is a buzzword which is called the metaverse. And I'm quite sure and convinced that the metaverse will be the market in the future. It's like Industry 4.0. Nobody knows exactly what it's about, but the growing prognosis is quite huge. Some say it will be more than $1 trillion turnover within the next 7 to 8 years or 10 years. Which is quite interesting. But what would happen from my point of view, all these segments will to grow together in one huge moving picture market. And this is what we are having now in the German market already established. We are dominating this market. So our goal is to go from being national, and national in this terms means that we are in Germany and in Austria. We are the only company which is present in 2 countries. Austria was a lucky punch for us because we were able to learn about the so-called tax harmonized EU, which was quite a headache. But now we are able, because we learned it in German. Our target list is quite big. 13 targets. With all of them, I talked with all of them. I had a beer, I had a dinner, I had a lunch. We have some preliminary and LOIs. We have term sheets. So this is what we want. This is what we're bringing with us. Actually, the list has to be extended to two more targets with more than 300 million. So there is quite a buyer's market for us because all companies do have troubles because they work in countries or in national markets which are not enable them to build a web shop that we bring along. For example, when we now went to Poland, we bought the first outside of Germany company in Poland. We brought them not only our web shop, our social media expertise, but also our standing in the market, which meant that we were able to bring them a Sony contract. Sony is the manufacturer which is dominating the market in Poland by 60 to 80% from their saying. So what are we going to do? We are, of course, we will be growing organically in the next years in 2-digit areas like we did in the past over the last 10 years. And quite impressive in the last 5 years, of course. But maybe not in this year and not in the next year. So we are quite conservative with our goals. We are here to build to realize our targets. We are, so much I can say, we are in close discussions. So as I said, the goal here is not to represent, to make a capital raise, let's say the normal style. We are looking for those investments who are looking deeper into what we are doing and who are more interested in let's say the uniqueness that we have. But as Norbert will point out later, we are able, we have to do some homeworks as well, like the volume in our shares, but he will come to this. So what we are doing is we try to expand our dominance from the German market into the European market, which means that we want to enable us to gain economy of scales, that we want to increase our market standing. And at the end of the day, it's a quite easy to understand business. As I always said, the arithmetic of what we are doing is quite easy. We are usually buy from between 20 to 40% of the turnover, and usually we increase this value by 3 times. Looking at the current stock price, we increase it by 8 times. But there is a lot of value add by doing this buy and build strategy, if it works out. So let me wrap up my part. Seven things you have to recognize. We are the market leader in the German-speaking market. There are great opportunities for us to develop the market from the niche market to the holistic market. We did it in Germany. Now we want to target the European market. We are the company, I have forgot to say this, which has the broadest product portfolio, which made us actually manufacture independent. We are able to enable high economies of scale. Our negotiating power is quite big. We have a quite modern approach towards web shop and e-commerce and social media. And of course, we have a proven record on merchant acquisitions. If you are interested of what we did, Google my name, Google Teltech, look back what I announced in 2015 and 2017 and in 2018. I was saying more or less the same that I said now, but we delivered, and we were doing quite well. So Norbert, now it's your part.
Thank you, Ralf. Hopefully you can hear me.
Yes.
Very good. So I will give a brief overview on the figures and on the share development. First one is the share development. As Ralf mentioned before, we started in the primary market on the stock exchange in Düsseldorf, also including Xetra trading in Frankfurt on the 1st of May. And you see the development of the stock price in this chart. We have seen in the last 2 weeks a very sharp increase on the stock price. This is due to some announcements in the market that will be a huge increase to be expected. We cannot support this development, and so we stick to the price which we have in our research numbers of Mondega and GBC. The first one is 40 as a share price, and the second one is about 51. So we see the breakdown of the shares, which is mainly in the hands of the former founders of the Teltec company, the Bucon. 50% of the shares are in the hands of Ralf Pfeffer and TFM, which is the other partner of the three founders. The free float of 29%. This is quite important because on the 18th of November, we will have here a release of the lockup of these people of this 700,000 shares of the free float will be released and can go into the trading into the market. For sure, we will take care that this will be not done immediately to have not a big pressure on the share price. Here we see figures which we have seen before. The accumulated growth rate in the sales numbers is 24%, starting with the year 2017. The major increase was from 2020 to 21. As Ralf mentioned, we had one acquisition in this year, which is the company PPM. This delivers 17 million of this increase. The remaining 27 million from 67 to 111 came from organic growth, which was mainly driven by streaming equipment in this year. And this shows that we are very flexible regarding the market developments, which we support very good. On the other hand, in the last years, we have to consider supply chain problems for our equipment coming from Far East, and also that some manufacturers with high price equipment could not deliver. So on the other hand, we see our EBIT figures, our figures from the last 3 years on this chart. You see that our expectations for the current year is an EBITDA figure of 5.0 million, regarding, on the other hand, 120 million in sales and 3.9 in the EBIT figure. We have last week published our half-year figures for the year 23, and this shows that we are quite on a good track, because on the one hand, the first half year is usually, due to seasonal reasons, worse than the second half year. And on the other hand, we have to consolidate the company mentioned before, move it in the second half year for the total year, because this transaction has been done in July. And therefore, you don't see this company in the first year figures, in the first half year figures, sorry. So this is just a summary of what I said. I think we are quite on a good track to stable our gross margins, maybe to increase it in the future years, because this is a very important figure for every company in the trading business. So just look on the balance sheet figures. You see a very quite strong equity figure of 15.5 million, which equals to an equity ratio of more than 40%. And on the other hand, we have a high cash figure, 12 million on hand. By end of last year, this figure was on the 30th of June this year by 7.7 million, quite high. But you remember, we have done 2 acquisitions in that time. So there is a cash outflow reflected in these figures in the first half year. Free cash flow is also quite high with 6.5 million. just to summarize that, we are on a very good, in a very good position to have a platform for further acquisitions. That means if we would do a smaller acquisition, let's say with a ratio of a price between 5 and 10 million, so we are able to finance that without going to a capital increase into the market. And on the other hand, if there is a big acquisition, that is the reason why we are have been started in the beginning of this year in the stock exchange. And therefore, if we go into a capital increase, this means that we will have one of the targets with a bigger acquisition on our list, which is progressing. And therefore, the message into the market is, if we would go to a capital increase, this will be only the case with a bigger acquisition target, which is, let's say, above 10 million of financing. And this will be then done with a capital increase, and on the other hand, to get a certain leverage position with liabilities on banks or other institutions.
Yes, absolutely.
For foreign capital.
So now we should grab at least some few questions, if there are any question asked.
Yes, there are already a few questions in the chat. So can you tell us more about your M&A strategy? What would the target look like in terms of sales or EBITDA or multiples? And would Italy a target market be for you?
It's quite different. Like you can imagine when we acquired in Poland, where the crisis of the Ukraine war is much severe than in the Western world. It was not that good. Actually, it's going to be a buy and turnaround, which we already managed in the past. But nevertheless, the price was, let's say, more than reasonable. In general, all European players are too small to have a future. They don't have a strategy. They have strategy dilemmas. And yes, of course, Italy is of course one of the major markets, the bigger markets, which we are approaching. What we always do, this is what we did in the German market. We are looking for those who are already established. We try to get things together, and then we enforce what they are doing. We did this quite successfully in the German, in the Austrian market, and now starting in the Polish market. And yes, every EU country is a target, and we are also we have targets outside the EU, and we have targets in the Middle East and in the US.
And in the research report there, I read there's a startup incubator, Avemio Digital, which seems promising. Maybe can you give us some more details about that?
Yes, before we acquired MoveIt, it was quite clear for me as the strategic guy that we have to do something in the IT and the especially AI terms. So we invested in startups companies. We went into a project for 1 million, and we got some subsidiaries of €500,000 for an AI project, which is quite successful. It was a general step, and at least one of the, and it's also written in the half-year report, is Obvious Future. It's actually very, very successful and very well accepted in the market. It is just, let's say, to build. My task is to build the future, and this is what we are doing there quite successfully as it looks now. With great management in the certain companies.
Excellent. So the time is already up, but thank you very much for your great presentation.
Thank you for your interest. Thanks.
Thank you.